Good afternoon, guys. Let's have another go. I don't know what just happened there, but welcome to another Calm COVID Convo. This time we're going to be discussing the update on the JobKeeper payments. Now, legislation was passed last night, so we have some additional information. There's still a few gaps in there, which we'll talk about that. But we will give you an update on the gaps we have been able to close so that we can start to make some decisions within your businesses and we can start to do things to get you ready for these JobKeeper payments. Of course, my name is John Knight. For those of you that don't know me, I'm the Managing Director and Founder at Business Depot. I'm a chartered accountant. These days, I'm getting a lot deeper with businesses around their strategy and so forth, but enjoying being back in some tax legislation and looking at some of these things with these JobKeeper payments and stimulus packages and so forth. Of course, welcome, Rebecca.
Hi, John, and hi, everybody. I'm Rebecca. I'm the head of Business Depot in Sydney and the head of technology at Business Depot as well. And yeah, like John said, never thought I'd enjoy getting back into tax legislation, but it's consumed our lives for the last couple of weeks.
Of course, the theme of our Calm COVID Convos is to take some of the stress, take some of the hype, take some of the drama out of these discussions around all of this COVID craziness. At the end of the day, we've got businesses to run and we've got people to look after within those businesses, which I know we all care about. So we want to make sure we can get everything that you're entitled to so that you can continue and come out the other side of this economic hurdle that we're facing at the moment. We've already received stacks of questions in advance, but please use the Q&A function within the webinar as well. Preferably the Q&A than the chat because it's much easier for us to monitor through there. So Rebecca, we've had a bit of clarity overnight now that we've got some legislation that's passed. Interestingly though, a lot of the detail around this is wrapped up in what they're calling the rules for the JobKeeper payments. And I know they were actually released yesterday, but only for a very short amount of time. So they were released and then they were removed. Luckily enough, some of us have a copy of those. And so I suppose there's a little bit of proviso of the discussion today that we're looking at these rules that were released and have been removed. So there could be some subtle sort of changes or little changes within that. But at the end of the day, the core legislation has been passed. So Rebecca, a number of things we were able to get some clarity on. One of the big items that people were worried about was about the self-employed people, and particularly the self-employed people through trusts, partnerships and companies who didn't pay themselves a wage, but paid themselves by way of drawings, distributions or dividends. Have we been able to get some clarity on that for our audience?
Yeah, we actually have gotten some clarity, and in the original releases around JobKeeper, what we were told were that self-employed people, like only sole traders, were going to be eligible for a payment of $1,500 for had dropped in line with businesses that are eligible. That's now been extended out, and we've got clarity that has been extended. So if you are receiving a payment as a business owner, and it's not a wage payment, so if you're a director receiving dividends or taking out, say, a management fee or something, or you're or just other payments out of your business, if you are a beneficiary of a trust and you only receive trust distributions, or if you're a partner in a partnership, you are now eligible for the $1,500 payments so long as you meet the other criteria. However, you cannot claim it for every person. You can only claim one per entity. Okay,
so I think we've got a couple of people struggling to hear you there, Rebecca. Sorry, I think your kids are on the internet or something or other, using up all the bandwidth. But to just summarise a little bit of what Rebecca shared there. So very clearly, it was able to be applied for self-employed individuals, so sole traders. It's now, we've got clarity that it will be eligible for those that are self-employed through a trust, a partnership or a company and don't actually pay themselves a wage. There is a limit though of one person. So the comparison or the example I give there is if you've got a classic business, a mum and dad business, where mum and dad are both actively engaged, and that's a terminology that's coming up now, are both actively engaged and working in that business, then only one of those parties will be eligible to get the JobKeeper payment. I've already been asked the question, well, what if I pay myself a wage and what if I only take dividends out of the business? I don't have the answer to that question at the moment. What I do know is there's anti-avoidance rules in this legislation that basically says if you do anything to increase your prospect of getting the JobKeeper payment or to increase the amount that you get, then that will be considered anti-avoidance. And obviously they won't be accepting that within the whole scheme of things. We might
while we're talking about that, also just to mention that what's not clear with that at this point in time is whether or not, if you claim that payment, if you actually have to take that out as a wage to yourself moving forward, or how that's going to be dealt with as a director or a beneficiary of a trust.
Yeah. Your internet is really bad, Rebecca, so I struggled to sort of hear you then. So I don't know if you want to log off and log back on maybe. But just to repeat what Rebecca said there for those that are listening, what we still don't know is whether they will insist on that payment being paid to the individual, for example, as a wage. Because one of the things that are really clear now is that the payment, to be eligible to get the payment from the government, we have to have paid the amount to the employee. So given they've now made it clear that self-employed people through trusts and so forth are also eligible for the $1,500 to the extent of one person, we haven't got absolute clarity yet as to whether that $1,500 has to be paid out of the trust, out of the company, out of the partnership as a wage to that individual as well. We might jump on to the second big unknown that we've had within this JobKeeper payment area, and that is around the decline in turnover test. So anyone who's been keeping track of this would know that there is a test that requires, we've now got two of you, Rebecca, aren't we lucky? That's fine.
Well, hopefully one of them will actually work now.
So the 30% decline test, or they've called it the decline in turnover test. We have been able to get some clarity on that now as well. And so a couple of bits of information around this. Firstly, the way they're measuring it is they're using the definition within the GST Act, which is for projected GST turnover. So this is where they're bringing into account the idea that you will be eligible if you meet, if your income is projected to reduce by 30%. Rebecca, I don't know the last time you looked up the definition of projected GST turnover or anything like that, but you got any comments on that sort of definition and sort of why they might be doing it that way?
Well, because the payments will be made for that particular month, although it's in arrears to cover the wages, it's in advance of your trading for that month, which is why it needs to be projected and why you need to do an estimate. And it's also why at the end of that month, within 7 days, you have to report on your actuals. So when you're doing your projection, you have to have a really good grasp of, or good indication of what you actually think is going to happen this month, which is probably going to be a whole new world for a lot of people, particularly as things are a little bit uncertain at the moment. But don't overestimate, I suppose, the downturn if it is, because there is that catch-all that if your income doesn't actually drop below 30% to the comparable period or close to 30%, there is a risk that you might have to pay back any payments you receive. Yeah,
okay. That definition, that projected GST turnover definition, typically is about, you look at your current month and you look at the next 11 months. They've amended that definition within this legislation to be for the period that we're doing a comparison for. But basically it allows you to be looking forward. Now that's going to be very relevant to a lot of those real estate agents that are out there at the moment as well. So real estate agents have been really concerned, that I've been talking to, because they've still got income coming in. They've still got settlements that are happening because of contracts that were previously written. So they still will have income in April. But if their projected income is now less than 30% going forward, we can rely on these rules to get you eligibility to the JobKeeper payments. I'm pretty confident with that now in how the legislation appears to have been structured. The other thing with the 30% test is we have got clarity that it is a comparison that can be done on a month versus the same month last year, or on a quarter versus the same quarter last year. So the first month that it can be applied to is the month ending 31st of March, but it's also eligible for April through to September. We also can apply the 30% test as a comparison to the same period last year for the 2 quarters ending 30 June or 30 September. And so that's the first test. But Rebecca, I understand there's talk that ATO will also come up with some other tests.
Yeah, we don't know what they are yet, unfortunately, and particularly that might be part of the reason why the rules have come down, because those rules are going to be expanded to give us a little bit more guidance on exactly what we're going to do.
They're clearly allowing the ATO to set their own tests, though, aren't they? So the ATO we're expecting
this, although it will administer.
Absolutely. The ATO we're expecting to give us some tests, and then there's also going to be discretion. Now, the discretion is going to be necessary to take into account those different situations that people are in. So importantly, I think we've seen a real theme within the fact sheets and the information that's released on this, that there's an intention to give people this payment if they're entitled to it. And it's not about this hardline sort of rule of you're entitled or you're not entitled to it. So they've clearly sort of said things like, if you've had a business and you've sold it to a different entity, they'll look through that situation for determining some of the requirements and so forth. So the first thing that's solved with the 30% test is that it is a projected turnover using the GST turnover definition to determine whether that's appropriate or not. If you don't meet that hardline test, obviously we'll be able to look at the ATO tests as they release those, and we will also be able to apply for discretion as well. And we've actually got a question that's popped up on the chat that's probably a good time to answer it, and that was from Chris around what if it's a new business and you don't have trading last year? Well, firstly, to be eligible, you have to be trading as at the 1st of March. So as long as you meet that, you can still be eligible. And we're then going to have to rely on either ATO discretion or the other ATO tests to check whether you have dropped by 30% or not. Rebecca, you got any other questions there that are popping up with regards to this one, or should we power on through the key things and then come back to the questions?
We've just got a question here about whether or not your business, if it doesn't meet the 30% reduction in March or the first quarter, but then you're expecting it to downturn in April, when you will be eligible at that point.
Yeah, so you're eligible from the first period where your projected turnover is less than 30%. So if you don't meet it from an actual perspective at the end of April, you'll then, by the looks of things, should be able to meet it in May and in June.
Yeah, and we've got another question here I think we should address around, it's a sole trader question about whether or not you'll get the payments if you are eligible if you're not registered for GST. Now, if it's going to be monitored through the ATO and through the BAS lodgement system as well, that's an interesting question. Did you come across anything to do with that, John?
No, I haven't come across that situation. So we might, if there's a name on that one, it might be useful to just make a note of that one, Rebecca, and we'll reach out and see if we can look into that. Because one of the interesting things about this legislation is thinking about how the ATO is going to administer it. Now, clearly they're relying on single touch payroll and your BASs to do most of the administration around this. So for them to be able to see your turnover, they're going to look at your BAS that you lodge in March and again in June, and they're going to compare it to the same period last year. Rebecca, I believe they're going to introduce some other reporting requirements though as well, in particular around the monthly sort of turnover.
In regards to when you've got to report your actual or the payments in advance?
Well, both actually, but yeah, the monthly turnover, I think we now have an increase in the reporting requirements that we have to give.
That's right. So to stay eligible and continue to receive your payments, or to receive your payments at all in the first place, it won't be a lodgement only through the BAS. You're actually going to have to independently report your turnover and how it has decreased from a comparative period, whether it's this time last year or whatever you're doing if you're a new business, and the appropriate process there. So it's going to be an extra layer of reporting that we have to do every month.
Yeah, and we don't quite know how we're going to be required to do that yet. We expect the ATO will come out with some way to do that, because typically you only have to report your turnover on your BAS item. What is it, G1, is it, Rebecca?
That's right.
Item G1 is where you put your turnover every quarter. Now, unless you do a monthly BAS, which most of you won't, because only big businesses have to do a monthly GST remittance, then we're going to have another reporting metric that we have to use and we have to follow.
That's right. Sorry, just quickly, guys, I can see lots of you popping questions in the chat. It's really hard for us to keep track of those. Could you please try to move them back over to the Q&A? Sorry, it is much harder for us to follow them there. We've got a question about annual membership income received, say, once a year, and lumpy income, which was also covered in the Treasury notes. Do you want to cover that, John?
So what, is that like an annual fee that you receive from somebody?
Yeah, so they've addressed how to treat lumpy income, and it's going to be sort of these one-off, out-of-the-box scenario processes that we'll have to address when we're doing the reporting, and maybe find different comparative periods for you. So long as there's a justification for it, it might mean your process isn't as smooth as everybody else, and there might be a slight delay on receiving the payments, but we can still look at doing it.
Yeah, okay. Yeah, you're right. And yeah, I hadn't actually come across that one yet, Rebecca, after diving in overnight with the information that's available. So I'm glad you're on top of that one. I know one of the things people were pushing for was to extend the payments to a wider net of casual employees. That did not get through. So the legislation requires casuals to only be eligible if they've been working with that employer for up to 12 months as at the 1st of March 2020. Now, I know we had a question in advance today around this. So let me pull that one up. I know Shane had a question, and he's quite right. The information on this and the legislation requires that casual to have been engaged on a regular and systematic basis for 12 months up to the 1st of March. Now, the legislation doesn't include a definition of regular and systematic, which would mean we can only default to the case law, any other definitions within other acts as a reference point, or we get to the normal dictionary sort of definition of regular and systematic. It might be something that the ATO gives some guidance on, but it's not something that is clearly defined. I would expect that it means regular. What is regular? Is that weekly? Is that monthly? We don't know. Systematic, obviously in a very structured sort of way that they are someone you can access, would be what I would expect for that. Anything you'd add to that one, Rebecca?
No, that's my understanding as well.
Yeah, so until we get more clarification from the ATO as to how they're going to interpret that. One of the other key things that were clarified in this as well, because I know a lot of people have been worried about having to pay these amounts out to your employees in advance of getting the amount back from the government. Now, I noticed on the rules that went live yesterday, but then were removed, it actually talked about a payment only being made within 14 days of month end or the relevant period. Earlier, fact sheets and everything have talked about the first payment being made in the first week of May. Now, that's going to be a bit tricky because I think we only have to report, I think, within 7 days of month end your turnover as well. So it looks like that payment date might have been pushed out another week, but what they have done is they had made it clear that the $1,500 amounts have to have already been paid for you to be eligible for the JobKeeper payment back into your bank account at that point in time. And I think that probably clarifies for some of those real estate agents on the webinar where you were worried about debit credit arrangements and com-only arrangements and so forth. I think that sort of answers that question, that if you've got a com-only agent, you have to pay that $1,500 to them as a commitment to them. I don't think we're going to get legislation to clarify whether you can then use it as a contra against commissions, but I would expect that you can't, because it needs to be clearly, definitively paid to that person. What else did we learn from the stuff yesterday, Rebecca? Any other key observations?
We've had a couple of people actually ask us questions about employees who have visas. So that status hasn't changed from the earlier information from Treasury. So yes, if you have a permanent visa or a special category visa, which generally refers to New Zealand citizens, you can be eligible for the payments. But if it's a non-permanent visa, you're still not eligible.
Yeah, that's exactly right.
They've taken a very hard line on that.
Yeah, they have, haven't they? I mean, obviously they've got to draw the line somewhere, don't they? One of the other things that were clarified with regards to the 30% test is that the 30% test will apply to each entity within a group. It is not applied on a consolidated group basis. So you need to look at the consolidated group to determine which percentage decline is required. Now, given I think there's probably no one on this webinar with turnover greater than $1 billion, pretty sure we're all going to be in the 30% category. But you then need to work out the 30% drop in each of your different entities. So if you've got two divisions split in two different entities, then you've got to apply it in each. It doesn't matter whether it applies it across the board. Each one has to have declined by 30% for that entity to, in particular, be eligible. And of course, they introduced a new percentage for charities, basically. So ACNC registered charities only have to experience a 15% drop to get eligibility for the JobKeeper payments. Okay, Rebecca, you got some questions for us to try and solve for our audience?
I do. How about, we've got one here around employment agreements that were signed by a new person in February that hadn't started yet, and whether or not they would be eligible or on grounds for a special exemption. Everything that I've read is very clear that they must have been working for you in actively engaged and in March. So even if they signed an employment agreement in February, if they hadn't started by the 1st of March, I'm going to say no, they're probably not eligible.
Yeah, it's an interesting one, isn't it? It's probably a bit of a legal sort of question as to whether they're an employee. I'm just on the side here. I'm just having a look at the requirements, and the specific wording is that on the 1st of March, yeah, on the 1st of month, the entity carried on. I might have to look into that one and come back.
They're employed as at the 1st of March and who are retained in employment.
Yeah. So maybe that's a legal question as to whether someone's considered employed just because they're contracted or not.
Yeah. And it would depend on whether or not your contract specified a start date that wasn't in February, maybe after March, after that 1st of March date. But absolutely check with legal.
Okay. There's a good question on here from Bernie talking about independent contractors. So now that these self-employed rules have been clarified, the independent contractors in their own right, if they experience the 30% drop and if they meet all the other requirements, will be eligible for themselves, for one person, to get the $1,500 payment. But Bernie's question in particular is around managing independent contractors through an agency. So they're employed through us and the client. Do contractors receive the JobKeeper payment? They would have to only get it in their own right, because I don't think you're actually physically paying them a wage. So to be eligible through the employer, I suppose, you have to physically be making a payment to them through the wages system. If you're paying them a contractor amount, they are carrying on their own business with their own ABN, and they would be required to seek the JobKeeper payment in their own right, in their own entity.
Yeah. Well, I've got another question here. I think we've touched on a little bit, but maybe go over it again. which is about a business that's scaled up. And this time last year, they had 4 employees. Now they have 10. So comparatively, then the income's probably higher this time at the moment compared to this time last year. And how are they demonstrated 30% drop? Now there is some, this does get addressed a little bit in the Treasury notes around in the same section with the lumpy income or great changes to the business. And there will be an alternative way for you to be able to compare that. However, what it says is the commissioner will have to pass his discretion on whether or not you'll be eligible. We don't have the clear process for that as of yet.
Yeah, so that'll rely on discretion or rely on the tests that the ATO releases over the next little while for that one. We can't rely on the hard, fast test that's within the legislation at the moment. There's a good example on here where somebody previously paid someone $10,000 a month. They've had to reduce their days and the amount they're paid to $7,000. The business is going to be able to meet the 30% drop in income, and they're asking whether they are expected to top up their wage back to the $10,000, or as my business revenue begins to decline further, can I assign this subsidy against him as wages but keep him on the $7,000? So there's a little bit of a fair work sort of question within here as well, and it's probably a good point to just note that the Fair Work Commission is making heaps of changes at the moment to the different awards and so forth. I understand there's going to be a different type of pandemic leave or something or other which is introduced. We had a webinar with Justine Ansell about some of these topics last week, I think it was, which can talk about that, but you've got to keep an eye on it from a Fair Work perspective. But my understanding is you are able to reduce their hours and reduce their pay accordingly. And I do not believe there is an expectation that you have to top it back up to the original pay of $10,000. The requirement is that you've paid to them at least the $1,500 each fortnight.
We've got a question here about the visa holders and whether or not they can access their super. They would need to meet their own tests for the super release, which is the $10,000 payments. And although that's not JobKeeper, just to touch on them really quickly, that's if they were unemployed or on or after the 1st of January, they were made redundant, had their hours work reduced by 20%, or as a sole trader, their income has reduced or the whole business has been suspended. But there's more information on that on our blog. That will be monitored by their super funds, and they'll know by contacting their super fund directly whether or not they can actually access those payments. Yep.
Got a question on here from Katrina. Hello, Katrina. If you have part-time workers, example, doing 10 hours per week, who will now be receiving a higher wage per fortnight, being the $1,500. They're willing and able to work additional hours to help us get through this period. Are there any HR or other concerns around this? Again, not really a JobKeeper question, but a HR question. My understanding is, and this is from Justine Ansell, who we lean on a lot for our employment law, is that you can't automatically just ask them to do more. I think in my head, I'm working on the basis that the hourly rate needs to keep roughly the same. If you're asking them to work, you can ask them to work more to get to that $1,500 sort of amount. Is my understanding, but it's also probably just a fair work sort of consideration within there as well. Okay. We've answered that one. What else you got on there, Rebecca?
Just having a quick look through.
Actually, Margie's got a good question on there. What about healthcare businesses which don't have GST on services? Can we use projected reduction in income through March into April? So when you have a look at the actual definition of projected GST turnover, it actually includes GST-free sales. So the sales that are excluded from that definition are input taxed sales. So what's an input tax sale, Rebecca? That's like financial services, like banks and those types of things. Whereas medical is GST-free, isn't it?
Correct.
Yeah.
And that technically should be reported on a BAS as well, if you need to be reporting. What's that labeled, G2?
Yeah, I think that's G2. So Margie, you should still be right, even if it's not a taxable sale, the GST turnover definition will include GST-free sales as well, which is your medical type supplies.
Yeah, we've got a couple of questions here about the actual processing of these payments and wages. Now, that hasn't been released yet by the software providers, but they're all working towards actually having a solution for you. And when we have that, we will share it. Xero today released some information that they'll be making the process of running payroll and acknowledging those JobKeeper payments in your system, and we'll share exactly the mechanics of that once we know.
Yeah. Daniel's got a question on here. When the JobKeeper payments start, what is the best way to adjust my staff's wages to reflect the amount we receive from JobKeeper? We're on the verge of letting staff go due to lack of funds. However, the JobKeeper will allow us to keep them on. So I understand people don't have to actually be working for the JobKeeper payment. You just need to keep them employed. And so that ties into, I suppose, Rebecca's question that she just answered there about Xero. How do we track that within the system? It's still paid out to them as wages, in that we still have to deduct tax from it. And if they normally get more than that, you still have to pay superannuation on the amount. So not quite sure how we'll practically do that yet. And we'll be guided a fair bit by our software providers around that.
We've got a question here from Kate about whether or not employees need to exhaust their leave first. So employees using their leave is not really got much to do with actually the eligibility of the JobKeeper payment. It's got actually nothing to do with it. So whether or not they use their leave is not part of this. You just need to make sure that if you're going to claim for them, that you pay them the full $1,500 that you'll be receiving.
Yes, that's correct. And I know a lot of people, and I think it was in some of the explanatory memorandum or some of the fact sheets I was reading last night as well, that you can be paying them the $1,500 and they can be supplementing that with leave in addition to that. So they're two different things. But Donna's got a question around, is there an age limit on casuals? Example, a hotelier employer, year 12 student on weekends. They have to be 16, is my understanding.
That's right. That's the only age limit.
That's the only age limit, isn't it? Yeah, they have to be 16 years of age as one of the age requirements to get the JobKeeper payment. Okay. Karen's got a question. Full-time, part-time employees must have been working for 12 months. It's actually only the casual employees that have been working for 12 months. Any full-time or part-time employees that are employed at the 1st of March are eligible for it, assuming they meet all the other requirements. The 12-month rule is only for casual employees. That's a good question to ask.
What if a full-time employee has been terminated mid-March? Can they be re-employed part-time earning only $750? I'm going to assume that's $750 a week. Yet you can rehire your employees and you can have a new, what we understand is there can be some new arrangements to the way that you employ people, whether or not they're engaged full-time or part-time. But what you need to do, as John mentioned before, is just make sure that that is aligning up with Fair Work and your awards. And there are changes that are rolling out at the moment. Best case, if you're unsure, to contact Fair Work or to contact a HR lawyer.
Yep. What if the business doesn't have the income to pay the employees before the JobKeeper payments come through? That was one of the things which was identified. It absolutely does require a payment to have been made to the employees before you will get the amount back in from the government. So that's probably one of the biggest headaches we still have with this, is that businesses somehow need to be able to fund this. And so they're going to want to have absolute certainty, aren't they, that they are able to get the JobKeeper payments before they're putting their hand in their pocket for these payments out there. What did ScoMo say the other day, Rebecca? He said, go talk to the bank or something or other?
That's right. He's under the impression that the banks are just handing out money within 24 hours.
Yeah, I saw another comment from someone else yesterday in one of the fact sheets as well, saying, yeah, the banks are going to be extremely cooperative with this. So hopefully we've got some bankers online that are going to hand some cash pretty quickly.
I would offer that word of assistance that if you are going to need it, get on the phone to your bank managers and contact your bank immediately. Find out what you need to do to get the funds in place if it's going to be needed, and don't wait because they will be inundated.
Yeah. Can we pay $750 a week rather than $1,500 a fortnight? Yes, you can. What it requires is the fortnight is a very important terminology within there, within the legislation. So it does rely on them having received an amount in a fortnight, but it also then attaches the JobKeeper payment to that same fortnight. I have seen comments also that have gone to the extent of saying, what if I pay monthly? If we went the other way around, as long as it has the effect of them getting it fortnightly, it should be fine. And yes, the amount is gross, so tax does need to be taken out of the payment that you make to them of the $1,500. Warren's got a question. Is turnover revenue per month based on cash flow in or invoices booked? It's a good question, Rebecca. What would you say on that one?
I would say, considering it's talking about GST turnover everywhere, it's going to be in line with your GST registration, whether you're registered for GST and reporting it on a cash or accruals basis.
Yeah, I think you'd be spot on there. I think if you started measuring it differently, that's going to cause an alarm bell, and they're going to see it in the data that they lodge, that you lodge with your BASs and so forth. So I would agree. Just continue accounting for it on the same basis. Will be how they would be doing it. Alison's got a question. So if you pay the staff $1,500 per fortnight for JobKeeper payment, but then you are not eligible, what happens?
What happens is if you receive the payments and then turn out you're not eligible, you'll have to pay back the payments. However, there is no guidance right now on exactly how you would then potentially recover the payments from your staff. If they were working, then they should have that money that's owed to them. They should get paid for the work they did. However, if you're paying staff just to keep them employed and they're not doing any tasks, I'm not sure how that's going to be handled. And again, I think it's going to be a HR or industrial relations issue. Yeah,
I think you're right, Rebecca. We've got a question there. Is the 30% decline in revenue all depends on label G1? I think it's actually G1, G2 and G3, which are all revenue related. So those three items on your BAS are going to be really, really important. We've been putting that data on there for so long now without really having too much sort of use for it. Obviously, they've found a use for it in this situation so that they can mine that data. Scott, if you have two entities and two directors are the same for both, can you claim one JobKeeper payment for one for each director in each of the different entities? My gut reaction is you quite possibly could. I don't know otherwise. What do you think,
it's
Rebecca?
going to come down to that statement when they talked about it, that the directors are actively engaged in the business. So long as both directors in some format are actually working actively in those businesses, then I can't see a problem with the eligibility.
Yeah, that'd be my thoughts as well. Michael, I have a question relating to cash accrual. I think we've answered that one now.
Yep.
As a sole trader, will my eligibility be affected by my partner's income, which is earned outside of my business? Not for JobKeeper payment, no, not at all. So Belinda, nice to have you on, Belinda. If your partner, doesn't matter what your partner earns, it will not affect your impact to the JobKeeper payment. It would if you were going to get the job seeker payment through Centrelink and so forth. So in that case, are we required to pay $1,500 per employee without knowing whether we are eligible? Unfortunately, quite possibly. You're going to want to be pretty confident in your eligibility. And how they've sort of dealt with that is they've dealt with that around this projected GST turnover definition, which they're relying on. So I would suggest that unfortunately, you won't have absolute certainty while you're paying these amounts to them. And they have gone to the extent of if you say you're going to drop by 30% and you don't actually drop by 30%, they do have the ability to recover it from you. But we have seen in previous fact sheets and previous statements that they're not going to be too hard-lined on that. But again, it's in a different situation when you're actually in there. Rebecca, you got any questions on there you want to answer?
We've got here a question from Warren around superannuation, and do we pay super on the staff salary less the $1,500 as the $1,500 does not attract super? Now, that's a little bit the other way around, right, John?
Yeah. There's been a lot of confusion about the superannuation because I think ScoMo, when he first announced the $1,500 payments, said something along the lines of there won't be superannuation on it. But what's been clarified is the no superannuation thing is only relevant to those employees that are paid below $1,500 at the moment. So if someone at the moment is only paid $1,100, they're now getting paid $1,500 under the JobKeeper payment. It's only that top-up amount that doesn't need to have superannuation on it, is my understanding.
That's right.
Okay. Shelley's got a question. We had a few employees who were actively working on the 1st of March. We had to stand them down mid-March, but there's a high chance there will be enough work to bring them back next week. How does this impact the payment? If you bring them back, you'll be eligible for the payment. So standing them down, you're able to rehire them. Now, I don't necessarily understand completely the logistics of that and the overlay between job seeker and JobKeeper and different things like that. But the intent of the legislation is as long as they were employed on the 1st of March and they're employed again now, you'll be eligible for the JobKeeper payment for those people. What if you've stood down your employees and you don't have the work coming in for them to complete due to government restrictions? Do you have to pay them prior to JobKeeper coming in? Yes, you do. So if you're, for example, in the fitness industry and you've got people not actually working and you've stood them down, then yes, you will still have to pay them that $1,500 for you to be eligible for the JobKeeper payment back. You agree, Rebecca?
That's right. We've got another question here in regards to sort of that. Will I be eligible effectively?
Sorry, we missed you there for a second, Rebecca.
We've got another question around trading entities, but the same business and whether or not they'll still be eligible. Yes, you will still be eligible if your revenue has dropped 30%. However, it will be a different reporting requirement, which we're not quite exactly sure how we'll justify that as of yet.
Yep. AJ's got a good question on there. We purchased assets.
Sorry, I just
I think you've just cleared it.
That was actually the question that I was just addressing anyway.
Yeah, so if you do purchase something, if you purchase a business, for example, in a different entity, and then you're now trading a different entity, they'll look through that. They've said that they'll look through that, but we might have to see the ATO tests in that regard. Any idea how long it is until we know if we are eligible and how long we are expected to pay the $1,500? So the first payment I would expect around the 14th of May. They were originally saying the first week of May, but I would expect the 14th of May, given recent information that's been made available. And we would be needing to pay the JobKeeper, the $1,500 minimum to your employees prior to them. So if you've got up until the end of April, you'll then have 14 days to be paid the amount that relates to the fortnights in April.
There's another part of that question around submitting applications based on those discretionary considerations, which I'm going to assume is for circumstances where you don't fit the model straight away. And then if your application's denied. Now, unfortunately, it's just it's a bit of a roll of the dice. But if you're quite confident that, or you speak to us about your particular circumstances, and if we're confident that we'll be able to get you those payments through the guidance that we're given, it might take a little bit longer to sort it out, but you won't receive any funds at all if you don't pay people. But initially, I'd say just talk to us and we'll go through whether or not we think you'll be eligible. Yep,
Julia's got a good question. Do you have to qualify each month? Or once you qualify, you get it for the future 6 months. I believe it's a bit of a rolling sort of situation in that if you no longer qualify, I think you are no longer eligible for that month. So there's this monthly reporting requirement, which seems to be, is going to be really important. You can assess whether you've dropped by 30% on either a monthly or quarterly basis, but that's on a projected versus actual last year basis. But then you have to report every month what your revenue is. So I think we're going to have to continue on a rolling basis to apply this 30% test. My business wasn't registered for GST until early June 2019. How do you think this will impact our eligibility? That won't be a problem. There'll be other tests that'll come from the ATO. It's just not in these particular tests that we do know of at the moment. Just confirming, do full-time employees have to have worked for the company for 12 months? No, only casuals have to have worked for the business for 12 months.
We've got another question around turnover that's higher than this time last year. but you know that it will decrease, you'll be eligible once it decreases. And it might mean that you won't get the payments straight away, but once you can actually show that there is that decrease and you're confident that it will, that's when you become eligible.
Okay. Question here about what if the employees have been on leave for the month? I believe that's not a problem whatsoever. If they've been on leave for a month, they're still employed, they're still engaged with your organisation as long as they've received up to $1,500. My understanding is that that will still be fine. At the end of 6 months, if businesses haven't recovered to keep all employees on JobKeeper and you let them go, is there any catches coming out of this? Not that I'm aware of. So I understand as long as you've kept them employed, you're still entitled to the $1,500. It would only be if you then